with us today. All right, everyone here is ready. The slide is ready. So, Mr. John, now the stage is yours.
Very good. Thank you very much, and thank you for that. A global view on the outlook. I wish I could have been with you today, but very much look forward to joining the many visitors returning to Thailand to help the economy. So, before I get started, I'd like to share a little word about Dow. Some of you may not know us, but we are today more than 90% of all manufactured goods which get directly touched by chemistry. And as a material science company, Dow's products, technologies are building blocks to almost everything you come into contact with. From the buildings you live in, the vehicles we use to commute, the clothes we wear, the personal care products we use, even the drink packs we pick up from the grocery shelf. The list is endless. Our offerings are categorized into 4 market segments: packaging, infrastructure, consumer, and mobility. And we work with partners throughout the entire value chain. This year, we are 125 years young, and we are driven by innovation and sustainability. So, I'm not an economist, and surrounded as I am by such eminent economists and experts, I'm not going to be making any predictions or forecasts this morning, but rather explain how Dow, as a global multinational company, responds to whatever the global economy will throw at us in 2023. But just as importantly, how we see the forces around which we have based our strategy over the long term. It used to be that planning was kind of relatively simple, linear process with predictable risks and drivers delivering a 5-year plan, which we could then adjust annually. Not anymore. It's very clear that we're living through a period of unprecedented volatility that requires a completely different approach, much more agile and resilient in the short term, without losing focus on the key long-term trends that will determine success for any enterprise. So, with a little help from the excellent Economist and Harvard Business Review covers, let's take a look at the turbulent times in which we live. And as an example of the volatility, looking at our industry, the chemical industry, has faced over the last 3 years. In February 2020, nobody could have predicted the impact of COVID-19 pandemic and the dramatic demand shifts that were created by the lockdowns around the world. In February 2021, exceptionally cold, freezing weather in the Gulf Coast of the US caused the shutdown of the entire petrochemicals industry, which, together with the unprecedented supply chain disruptions, impacted product availability on a truly global scale. In February 2022, the conflict in Ukraine has caused energy prices to surge and contributed towards the inflationary environment that we see today. All of these events caused significant shifts in demand, in prices, and in costs. And none of these events were predicted. So, what will February 2023 bring? We just simply don't know. But what is more important than making predictions are the actions that we will take and we think the industry should take to prepare for any scenario. In the case of Dow, we're actually very familiar with cyclicality, and we'll continue to use the playbook that has served us so well through recent volatile years. First of all, we stay very focused on our customers. And to help us do that, we've introduced a customer experience, or as we call it, a CX metric, that's embedded in how we measure performance. Second, building a culture of resilience and agility that helps us operate with best-in-class reliability and safety. This means adjusting operating rates, changing supply chain modes, sourcing points, feedstock choices, whatever we need to do in real time as market conditions change. Thirdly, taking a very disciplined and balanced financial approach. We've strengthened our balance sheet by reducing debt and continue to focus very carefully on our cash performance. And finally, taking advantage of diversification. that we've deliberately built into our portfolio. Diversification into end-use markets that we serve, which range from packaging to consumer goods, from infrastructure to mobility, where often the demand signals are not synchronized, but also geographically, where we have assets in all regions of the world with different feedstock and energy cost positions. So these actions together allow us to continue to outperform, even as we try to bring order to what we believe is a very uncertain world. So what do we believe about 2023? Almost certainly it will be volatile, and we are anticipating several headwinds. In Europe, soaring energy costs are reducing the industrial competitiveness and really hurting consumer confidence. The dependence on Russian oil and gas is very difficult to diversify away from quickly. And although governments may step in and already are doing so to soften the impacts and promote a faster energy transition, it's a near certainty that there will be some form of recession in many countries. Much will depend on the outcome of that conflict in Ukraine, although there seem to be very few who are knowledgeable or optimistic about a quick resolution. In China, the zero COVID policy is impacting both consumer and business confidence. Many are forecasting the policy predicting or persisting into 2023 until a possible relaxation could take place when spring weather and lower mortality rates might be minimized. Several Asian countries that have relaxed restrictions like Taiwan, New Zealand, or Vietnam all saw their mortality rates rise to 400 per million. Although this is a low number, in China that could still mean 500,000 deaths. So we would expect caution. Additionally, in China, the concerns over the property sector are likely to persist. And then globally, we're clearly seeing the impacts of inflation, of rising interest rates, and the stronger dollar. So taken together, the economic outlook has many headwinds for 2023. Although, as we've seen over the last 3 years, things can turn around very quickly. But as importantly as what we believe about 2023, it's our view on the longer term trends that I wanted to share and how we use these to direct our strategy. And to introduce this subject, I'd like to pose 3 questions and share our view on the answers and how those answers influence our strategies and actions. The first is around globalization and a trend that we've seen for so many years. The question is it in retreat? Is it in reverse? The second around ESG, is it here to stay? And the third one would be around our people and our talent. Not just how do we recruit, but how do we win hearts and minds of our people? So let me start with globalization. It's been, I think, our guiding assumption in business for the last 25 plus years, that the availability of capital and technology with increasing free trade has allowed manufacturing industries to optimize supply chains, always for cost and efficiency, contributing to a period of very low inflation. The disruptions following the pandemic and the rise of geopolitical tensions have changed everything and rebalanced our thinking to better consider supply chain resilience and reliability. Reliance on a single ecosystem, however efficient, is now deemed a risk. And we are seeing increasing delocalization from places like China and growing opportunities in markets like Southeast Asia and India, as well as reshoring of production back into US and European markets. Costs will likely increase, but risks reduce. So for Dow in Asia Pacific, this means investing in lower risk, faster payback, higher return projects, which are close to our customers in China, for China, but also in other markets in Southeast Asia, for example, in Thailand, in Indonesia, and in Vietnam. On the subject of ESG, or environmental, social, and governance, this has become a mainstream topic for all businesses, but increasingly for the financial investment community as a measure of long-term risk. There have been some challenges and pushbacks this year on ESG, both on the costs required, given the energy transition required, but also concerns on energy security. And also people have questioned whether E, environment, really fits together with S, social, and the governance. Do they actually belong together as one concept? However, although definitions and rating systems we think will evolve, we do see ESG as a long-term driver around certainly one that we plan to invest. Protecting our fragile climate requires urgent action to decarbonize and limit the temperature rise to less than 1.5 degrees. We see impacts everywhere, including now in Thailand, where unseasonal rains are causing the flooding. So although the outlook for lower economic growth and current energy crunch may challenge the affordability and the speed of our actions, the endpoint of decarbonization really can't be compromised. This will require significant levels of investment, new creative public-private partnerships, and technical and technological innovation. For Dow, we have developed pathways to become net zero by 2050, while still continuing to grow. This entails breakthrough technologies to reduce our own carbon footprint, as well as using our material science to enable decarbonization of the markets we serve. For example, in electric vehicles or energy efficiency in construction or circular plastics in packaging. This decarbonize and grow strategy can turn ESG into a source of competitive advantage, while at the same time doing the right thing for our stakeholders and the planet. For the social part of ESG, we also see significant business benefits of increasing the inclusion and diversity of our workforce, as well as contributing to society. As you can see in this data on the chart, ESG is not just about doing the right thing. It's about creating business value. So great correlation between companies that have strong ESG ratings and higher returns, higher profits, but also engagement of employees, where 85% of our employees are more likely to work for a company that stands up for the environment and for its governance values. At Dow, our participation in employee research groups, which are a key part of our ESG efforts, is nearly 60%. 1/3 of our leaders are women. 55% of our board are diverse. And we've launched a supplier diversity program that has increased our spend with diverse suppliers. Ultimately, the best way we believe to future-proof our company is to have the best people in our organization. So attracting, motivating, and retaining the best talent is more crucial than ever, but ever more challenging in the competitive world we live in. So post-pandemic, we've seen new trends of the great resignation, the quiet quitting, and the so-called lying flat. So I believe that employees are increasingly looking for companies where they can understand and buy into the purpose of the company. At Dow, our material science can make a real difference to solving world challenges like climate change and ending plastic waste. So this has helped us define our purpose, to deliver a sustainable future for the world through our material science expertise and collaboration with our partners. As an example where purpose can help drive employee engagement, we've defined a goal to stop plastic waste. And in addition to new technologies and partnerships, our employees have led or participated in almost 600 beach cleanup events over recent years. One of the biggest, and of course I would say the best, is the one we held here in Thailand, which we do every September, and many of you in the room have participated in, together with our partners. So such events really show that our employees care, but it also helps them engage to our strategies and to our purpose. We're also finding that employees are valuing the flexibility that was born from the necessity of working from home during the lockdown period during COVID. We've responded by offering significant flexibility in a program that we call at Dow Design Your Day, which enables a conversation between employee, their work group and their leader on how, when and where work gets done. So we're still trying to optimize this so that we retain also the collaboration, the culture building and the development that comes with in-person office participation. But we do believe that hybrid working is here to stay. So in conclusion, I would simply share that a company's priority should not be predicting the short-term economic outlook, but developing the resilience and the agility to manage whatever surprises are around the corner. Certainly for us, our strategic priorities will be rooted in our longer-term beliefs, which we think will be much more consistent, staying close to our customers in a more localized world, pursuing our strategy to decarbonize and grow, and investing in diversity, inclusion, and capabilities of our talent. So, what do your 2023 priorities look like? Thank you. ขอบคุณครับ
ค่ะขอบคุณมากนะคะคุณจอห์นเพนไรส์นะคะ President จากดาวเอเชียแปซิฟิกนะคะก็จะทำให้เห็นเลยนะคะว่าเราอยู่ในยุคที่เราคาดการณ์อะไรล่วงหน้าไม่ได้เลยนะคะ
ใช่ครับ
อะไรก็มาได้ทั้งนั้นเลยนะคะจะวางแผนล่วงหน้าเนี่ยแบบ5 years plan อะไรอย่างเงี้ยไม่ได้แล้วเราจะต้องแบบเตรียมพร้อมอยู่ตลอดเวลานะคะ
เมื่อก่อนนี่สมัยเรียนก็ย้อนไปนานเหมือนกันนะฮะเราจะต้องมีวิชั่นเป็นหลัก10 ปีเราต้องมีแผน3 ปี5 ปีแล้วก็มีการปรับแผนรายปีแต่ตอนนี้คือที่เรียนมารู้สึกว่าน่าจะช้าไปแล้วกับโลก